All right, guys and gals, Joseph James here once again, and welcome back to the free trading course. We're back with this day number 5 of this 7-day video series, and I know you're just as eager as I am to learn more about this 3-step strategy. So let's pick up right where we left off in our last video. We've been busy learning how to become confident and consistently profitable traders with this free trading course. And we've been learning more about my trading strategy, which is my way of finding those high probability setups where we have an edge over the opposite side of the market. And remember, we trade this simple trading strategy together every morning in our trade room, because after all, watching somebody execute this strategy in a moving market is the ultimate shortcut to becoming confident and consistently profitable. But for today, we're going to keep digging deeper into this trading strategy. I call it the 3-step strategy because there's 3 main components. Step 1 is the day type, step 2 is the analysis, and step 3 is the entry setup. And when used correctly, this trading strategy not only gives me the confidence I need, but it makes it much easier to find high quality setups in any market that you want to trade it with. And you may recall from the previous lesson that we use 4 simple and reliable entry setups with this 3-step strategy. First is the failure setup, which is ideal for trading deep pullbacks in a trending environment or fading breakouts in a range day. And then you have the pullback setup, which is great for trading just off the low of a channel in a trend, or for those situations where a range is wide enough and we have enough room to buy low and sell high. And then you have the strength setup, which is by far the simplest of all the setups, but has some very important rules that need to be followed. And last, but certainly not least, is the trap setup, which is my go-to entry pattern when I'm worried about buying too high or selling too low in both trending or range-bound markets. All 4 of these powerful entry setups have a purpose, and they all have a set of rules to follow. And today, we're going to dive deeper into the 3rd setup, that strength setup. The strength setup is the simplest of all the entry setups, but a warning, it comes with a sense of responsibility to it, because you must follow the rules of this pattern correctly if you're going to see positive long-term results. So to learn more about that, let's dig into the fine details. We're going to cover all the fundamentals of the strength setup in today's video lesson. First, we'll talk about the mindset of the market and how the market psychology affects this important setup. Then we're going to learn what the strength setup really looks like on a chart, so you can start finding them on your own time. Then we'll dive deeper into this strength setup. We'll talk about the best places to look for strength setups on trending days, and even though we don't find many of these setups on range days, because after all, range days are pretty much the opposite of strength, right? But not to worry, I'll show you how and where to find strength setups on range days as well. And don't forget, I'm also going to share some expert tips to help you avoid the most common reasons why these types of setups might fail. So let's not waste any time here. Let's dive deeper into the first piece of this setup, the market psychology of strength. Remember, as professional traders, we need to understand the mindset of the market, because when we understand what the collective market is thinking, then we can better apply the correct setup at the correct time. Many traders lose money because they never invest the time to truly learn about the psychology of the markets they're trading. They just look for patterns or signals, unaware of what the market is thinking at that time, and they wonder why they don't find the success they're looking for. We here at School of Trade take the market psychology very seriously, and I hope you will too, because it's one of the most important parts of day trading. So let's talk about the ideal market psychology for the strength setup. First of all, traders are nothing more than human beings, right? Just like you and I. We're not robots, we're not machines. We're warm-blooded, emotions, fear, greed, like everyone else, right? That means traders hate missing big moves on the chart. In fact, most traders would agree that they actually hate missing moves more than they actually like getting into the move itself. And because of this fear of missing out, Traders often chase a market higher or lower if they feel there's an opportunity to make some money. But those same humans also get spooked very quickly too, don't they? When the average trader realizes they're on the wrong side of the market, they don't wait around, they don't pause to think, they get out of that losing trade as quickly as possible, don't they? And oftentimes, they don't even wait for their stop loss to be triggered. They just hit the exit button and get out while they still can. And just like any human being, traders want to buy at the lowest possible price and they want to sell at the highest possible price. Remember, we're all human. We hate missing opportunities that could have made us money. And because of that fear of missing out, we get spooked easily as we try to buy low and sell high along the way. And all of those emotions running through our minds is why the strength setup works so darn well. So let's go further now, and let's talk about what this simple strength pattern really looks like. Let's start with a bullish strength setup. As always, we only want to be trading the strength setup with the short-term momentum. Momentum needs to be bullish to even consider this type of buy setup. Then I'm looking for a strong move going higher for the bulls. Ideally, I want to see between 4 and 6 consecutive green candles. Keep in mind, anything less than 4 candles isn't quite strong enough, and anything more than 6 consecutive candles is usually going to be too high to buy or too low to sell on the flip side, which results in a lower probability setup. Once we see that strength move with 4 to 6 green candles, then I look for the entry signal, which is a red candle, larger the better, to buy as low as I possibly can. And I'll buy the close of that red candle. That's right, I'll just buy that red candle as soon as it closes. Very, very simple. So think of it this way. In a bull strength setup, the short-term momentum is extremely bullish. 4, 5, 6 big strong green candles. That means buyers are going to be anxious to get into this move. They have the fear of missing out. At the same time, the sellers on the opposite side of this market will see this strong move going higher, and they're going to think they can short into this pop. But with the short-term momentum being so bullish, once they see a single green candle going against them, they'll get spooked and exit their position, which only adds fuel to the rally going higher. Here's what it looks like on a real chart. First of all, we know momentum has to be bullish. I want to be going with the short-term momentum. Then I'm looking for a series, again, ideally is 4 to 6 consecutive green candles. Then, as soon as I see that red candle, I'm simply buying the close of that red candle. Strong bullish momentum, 4 to 6 consecutive green candles, followed by that red candle, and again, we're buying the close of that red candle. Here's another one. Momentum is bullish. Nice, strong, bullish momentum. 4 to 6 consecutive green candles. Again, I want more than 4, so I know the strength is strong enough, but I don't want more than 6 because that means I'm buying too high in this example. Then again, as soon as we see that red candle, as soon as it closes, we're buying the closing price of that red candle. One more here. Again, momentum being bullish. 4 to 6 consecutive green candles. A red candle allows me to buy as low as I can. Remember, right, when the market's bullish and we see a big jump going higher, now the fear of missing out kicks in. The buyers all aggressively, right, start buying as soon as they get any pullback. At the same time, sellers now are trying to call a top. But as soon as they see that green candle, what happens? They get bounced out and the market rallies higher. So now you can see what a bull example looks like. Now let's flip this over and look at a bearish example of that same strength setup. First of all, we want to see bearish momentum to even consider one of these types of sell setups. We're looking for 4 to 6 consecutive red candles, which signals to us that sellers are strong. And most importantly, traders won't want to risk missing this move. So what do? They'll quickly jump into any short position they can on any pullback off the low. And they look to do this with a large green candle. Larger the better, which is the only option they have for selling high. And they sell as soon as they see the green candle closing higher. Because honestly, that's the best they're probably going to get in this much strong momentum. And again, to recap, this type of setup requires us to have a strong move lower. 4 to 6 red candles is ideal. That triggers the fear of missing out on this move, which tells us we can confidently sell the next green candle to take it lower. And at the same time, the buyers who are now trying to buy this move lower, they get spooked real easily when they see the next red candle going right against them. They'll exit their long positions, which adds gasoline to the fire going lower. And again, here's an example of what it looks like on a real chart. First, momentum is bearish, right? I want to make sure I have an overall bear market. Then I look for those consecutive 4 to 6 red candles in a bear market, right? That gets the juice flowing. That gets the FOMO, right? Nobody wants to miss out on that move, so they know that any type of pullback at that point will be seen as a selling opportunity. But the real magic happens because it's the buyers. The buyers who are trying to buy this pullback. Again, it's a strong move down. Buyers want to buy low. As the buyers come in and try to buy that move now, once they see that follow-up red candle, they get spooked, they get out of their long position, they sell out of their long position, and that throws gasoline on the fire going lower. Bearish momentum, 4 to 6 consecutive candles, 1 signal candle, and sell the close of that green candle. Here's another example of this simple setup. Again, strong momentum move, 4 to 6 consecutive red candles, followed by 1 green candle. Again, that green candle, the bigger the better. That allows us to sell high, and we're going to sell the close of that green candle. Again, the strong move down tells the bears, get in when you can. Anyone trying to buy this market, whether you're buying it low or taking profit, will quickly resume getting back in once they realize that they're wrong. Again, last example here, right? I know these are all very simple here. Strong momentum move, 4 to 6 consecutive red candles in a bear market. We see a green candle. The green candle is our signal candle. We're literally selling the closing price of that green candle because we know that as buyers come in and try to buy this low, once they see a follow-up red candle, that'll spook them out of this position, right? And the market will continue going lower. Okay, so now you know what these very simple strength setups look like. Next up, now let's talk about where to look for these setups on trending environments. In a bullish trending day, the key is to buy as close to the low of the channel as possible. And this usually means the market has fallen below the channel and is now rebounding and running quickly back up to retest the highs. And the opposite is true for a bear trending day. I want to sell this strength setup as close to the high of the channel as I can. And this usually happens when the bulls have been trying to run the market higher. But when they fail off the top of this bear channel, price quickly comes collapsing back down to retest the low of that channel. But what about a range day? Can we still use this strength setup when the market is balanced and sideways in a range-bound market? Yes, we can, but we need to be very specific with where we apply this simple setup. Remember, all range-bound markets, the best way to trade them is to buy low and sell high. The key to buying the low of a range with a strength setup is to get the market as far outside the range as possible, so that when you see the failure followed by the pullback setup, you still have enough room to jump into that strength setup before you get back into the middle, or even worse, the opposite side of the trading range. And the same is true for selling off the high. It's tough to use the strength setup if you don't get a big enough breakout that fails and starts tumbling back into the range. This is why we don't find as many strength setups in range days, because we just don't see many opportunities where we can take a strength setup while still selling high of that range. It's not impossible, it's just relatively rare. But that's okay, because we have plenty of other setups that work great in range days, and we don't need to force setups that don't fit the rules. So now let's cover some expert tips to help you get the most of this valuable entry setup. Like I've said a few times already in this video, the strength setup is a very simple setup, but it's often overused by new traders. So here are some things to keep in mind. The best strength setups will come after a deep pullback in a trend or a large breakout of a range. You know, think of it like this. Think of it like a slingshot, where the market pulls back and then fires forward again. Or the market tries to leave the range and then gets sucked back up into that trading range. Again, look for deep pullbacks, in a trending day, or look for those big breakouts in a range day as they slingshot right back into that trading range. And remember, it's better to get into these setups early rather than waiting too long and getting in too late. For example, when you join me every morning in our trade room, you'll see me enter early on these setups from time to time because you can just kind of see the momentum starting to explode. But use caution. You don't want to wait to get into setups too late, because then you risk buying too high or selling too low. So when you see that big breakout running higher on strength, for example, you need to get into that trade quickly without hesitation. People make the mistake of waiting too long to get into the trade using strength setups, and they end up with losses because they're buying too high or they're selling too low. Another important piece of this is knowing where the market is trying to go before you take this type of setup. The strength setup can happen fast sometimes, and it's easy for a rookie trader to be a little too trigger happy and rush the entry without knowing where the market is truly trying to go first. Why is that so bad, you might be asking? Well, because if I'm trading a bullish trending day and I see a bullish strength setup start running higher and I jump into that trade without knowing the market's objective, I could be buying directly into the high of a channel or into a measured move resistance overhead. This is why I tell my clients they need to know where the market's objective is at all times, because strength setups, for example, will often trigger quickly and they won't have the time to measure and take the entry at the same time. This is one of the main reasons why rookies lose money with this type of strength setup. The market moves quickly, they aren't prepared, and by the time they realize what's happening, they've been fooled into taking a bad trade just because they didn't want to miss out on the move. And finally, one of the biggest reasons why rookies lose money with these setups is because they take a large majority of their trades as strength setups. I'll be very clear with this, guys. The strength setup should not be the majority of your trades each day. Yeah, I know. These setups are easy to see, and it's tempting to just wait for them all day. But please be aware, the strong moves with plenty of open space, they just aren't as common as you might think. In trending markets, you want to wait for that deep pullback, then look for that strength setup as it slingshots back to retest the highs or lows of that range. And I'm warning you, rookie traders will learn this simple setup and start taking 100% of their trades on strength, and they wonder why they lose money. Again, there just aren't that many strength opportunities that fit all the rules each day. I'm sorry, but again, that's why we have 4 different setups. So we don't need to force these types of trades when they aren't truly there. But when we have a strong momentum move with a clear objective and plenty of open space to run, the best entry setup will always be on strength. All right, so now you know how I use the strength setup. They're easy to learn, and when used correctly, they're really the best way to capitalize on those strong momentum moves we see a few times each day. And remember, the market psychology is so important with these setups. The fear of missing out, along with the panic of the opposite side of the market, plays a big role in why this setup really works. Now you know what they look like, where to find the best of them, and how to avoid the worst of them. And most importantly, hopefully you've learned that these setups shouldn't be your number one priority, because that's an easy way to get into a lot of trouble in a short period of time. But just like in previous lessons, today's lesson on strength is really just scratching the surface on how I use these strength setups every morning in our trade room. For example, I've said many times that these strength setups often happen very fast, and it's easy to miss the proper entry and lose money. And since we know the entry price is so important, what's the plan if we miss the entry? Do we skip the trade? Do you just get in at whatever price you can get in at? So what's the best route for getting into a strength setup that might have caught you off guard? Or not to mention, one of the biggest reasons why people lose money with the strength setup is because they buy too high or they sell too low. Like I've said before, it's common for people to lose money with this because they use the setup too close to a major objective, such as a measured move. But is there a trick to this? Is there a workaround that will allow me to get into a trade even if the setup triggers too close to the market's objective? Yes, there is. There are some easy tricks for these situations, and I'm going to dive deeper into these solutions with our advanced tactics in our members video course and our trading sessions. And how about the best time of the day? You know, I've always tracked the best times of the day for all of my setups. And I'll tell you, there's one specific time of day where these strength setups often happen most, and they're highly reliable. But then again, there are other times of the day that I want to avoid these strength setups. So yes, certain times of the day will yield better results, and you're going to want to learn those times of the day before you start trading these setups full time. And we can't forget about trade management. What's the best stop loss to use for these setups? After all, we're using the strength setup to buy relatively high, and we're selling somewhat lower than normal, aren't we, with this setup? The proper trade management is really important for the trade setup. You need to know how to calculate the right size stop loss and the correct profit targets if you want to be successful with this setup. And of course, these strength setups are most often included in a combination of other entry setups. And you certainly should learn where to find these setups in combination with all the other patterns that we use in this strategy. And last but certainly not least are the entry rules. Every setup has a simple set of rules. And as I've mentioned many times before in this video series, I provide a checklist along with all the written entry rules to each of my best clients. Because this strength setup is so simple, it's easy to forget about following the rules. And having a simple checklist to follow will make you that much more accurate with your trading of these setups. All right, guys, another great lesson in the books. I hope it's easy to see why I love these strength setups, right? Today you learned how important the market psychology is for this valuable setup. The strength of these moves causes traders to jump in without much of a pullback because they fear missing out on the opportunity. You learned what they look like with their 4 to 6 candles and that signal candle being the first candle going against the move. You learned how and where to look for these setups during trending days. And although a lot less common, we learned the specific situations you want to be looking for on range days as well. I gave you some expert tips to help you make the most of this powerful setup. And we also realized that even with those expert tips, we still have a lot more we need to learn before we can truly become the confident and consistently profitable traders that we all want to become. You'll need to learn all the entry rules, how to trade them when they move quickly, and how to work around the situations where the trigger is too high or too low for the setup. But not to worry, as a client of mine, you're going to learn all those advanced details and many, many more, so you can achieve the same level of success. And speaking of learning more, we have a lot more to learn in this free trading course. We've now learned the basic fundamentals of the failure, the pullback, and now the strength setups. Coming next in this free video course, we're going to go even further into our 3-step strategy. Because last, and certainly not least, is my trap setup, which is my go-to entry pattern when I'm worried about buying too high or selling too low in both trending and range-bound markets. Remember, all 4 of these entry setups have a purpose, and they all have a set of rules to follow. And in our next lesson, we're going to dive headfirst into my favorite setups, the trap setup. So don't forget, I have more coming right to your email inbox bright and early tomorrow morning. I'm going to send you another email tomorrow morning with the next video in this free trading course, so make sure you keep an eye out for it. You'll know when you receive the next lesson because it's marked in the subject line as FTC for free trading course. And don't forget about those trade examples. I'm going to keep sending you great examples of how we apply this 3-step strategy to our favorite futures markets. And keep in mind, don't forget to come join me in our afternoon trading sessions. Those sessions are every Monday, Tuesday, and Thursday at 2 p.m. Eastern Time, so make sure you keep an eye out for that email invite and come out and join me in the afternoon sessions. And don't forget, check your spam filter. Sometimes those emails get sidetracked before they get to you, so if you don't see the emails, check your spam. And please don't forget, we are running out of time to take advantage of that special bonus I mentioned at the beginning of this free course. If at any time during this free course you want to get started as a new client with me, get access to the members video course to learn all the advanced details, and join me every morning in our trade room, you'll receive a complimentary private one-on-one setup call if you take advantage of this offer in the first 7 days. And again, I won't be able to make this same offer after 7 days. I really want to, but I simply don't have enough time to do this for everyone, which is why I have to impose this strict deadline. So if you love what you see and you don't want to wait until the end of this free course, call me in the office to get started as a new client and take advantage of this private setup call. I know you're going to absolutely love your experience with us. And as always, before I sign off for today, I want to show you a recent example of the simple strength setup. And while you're watching, pay attention to how I qualify the setup using all the correct entry rules. Remember, the rules are the most important part of that strength setup. You're going to love it. Check it out here. All right, guys, all we really need on this trap low is that candle closing up above the moving average right now. Got a strong trending environment here, as you can see. We got higher highs and higher lows. I've got that channel. We're looking to buy off the low of this channel, and this is going to be a trap setup off of that prior swing low. Now remember, a lot of times these trap patterns are explosive and running higher, so keep an eye out for a strength trade following thereafter. Here comes this green candle. Now as long as this green candle closes up above that moving average, we are good to go on this trap. Remember, one of the key components of the trap setup is getting just below that prior swing. I've got my order ready to go here. Order is ready to go. All I need here now is that green candle closing here above that moving average. Ready to rock and roll here. It's a trending day. Trending days tell us to buy the low of a bull channel. I want to go with the direction of this market's momentum. Here we go. Looking to buy this green candle here on the gold. Looking at the 15.6 here, and we're pretty much ready to rock and roll here as soon as this thing closes up there. 15.6, there we go. This of course is a trap setup, right? Trap setup, of course, being a pullback just below, right? Just below that prior swing, and of course combining that off the low of a channel, right? That's always where you want to try to get these setups, right? In a trending market, we know channels are going to be key. Now, as always, as you may recall earlier, right, we of course have a little bit more volatility than normal here today on gold. Stop loss is based on volatility. First target is based on volatility. Second target is going to be the top of that channel. And then, of course, we can't forget about the third target here will usually be a measured move, because after all, we know this is a trending day. So there's the measured move up top there, couple ticks ahead of that measured move. Okay, so we're looking good here. Great job on the trap low. Now all we need is to get this first target. Now watch closely here, guys. Like I mentioned, 1, 2, 3. If we can get 4 to 6 consecutive green candles here right now, there's 4. Don't move that stop up too early here. Don't move that stop. There you go. There's the stop. No, sorry, there's the first target. Now move that stop right up to your point of entry and then trail it using that 2-candle trailer. Now at this point, we have 1, 2, 3, 4. Let's get our order ready here for a possible strength trade. Looking to be a buyer on strength, guys. We're going to buy the red close, right? Buy the red candle closing here on strength. If it closes red, we're going to buy it. Buy that red candle. Put the buy order right on the red candle. Grab it. If it goes lower, buy it. Just buy that red candle. As soon as that red candle closes, I'm getting long, right? The buyers will come in and they'll buy off that red candle. So here now we have what we call a back-to-back setup. This, of course, is a trap now into strength. 1, 2, 3, 4, right? Remember, 4 to 6 consecutive green candles. And one of the, do you see how big the space is overhead? Lots of open space overhead, right? That's the key to a good strength setup. Remember, like we say in the classroom sessions, we don't want to be trading strength trades if they're way up here, right? We don't want to be trading strength way up here. We want to be trading strength coming off the low, right, of these channels. Now, don't forget, let's trail that stop, 2-candle trailer, right? 2-candle trailer. And remember, we got that measured move is our big objective right now. Measured move is the big objective. So really, everything's pretty much coming off up here, up around that measured move. I always like to leave one to run, so we'll leave one of these as the runner, right? We'll leave one of these to kind of be the run. You know, if you have an extra contract, leave one to be a runner. But the majority of what we're doing here is again, it's a trending market. Trending markets tell us to go with the direction of the trend because after all, the market is on a mission to complete something. I've got a momentum that's bullish. I want to be a buyer with that momentum. And of course, with that momentum being bullish, I want to make sure I have lots of open space to run, right? Where are we trying to run to? We're trying to run to that measured move, right? I want to buy off the low of that channel, and you can see how explosive that move was. 1, 2, 3, 4. This is an ideal setup for a strength because we're coming off the low of that channel. We're going with momentum. The market has not reached its objective yet. It's trying to get to where it's trying to go. Now all we need here is to keep on trailing here, keep on trailing as we go. All right, so we're looking good there. We'll keep on trailing the stop here. Beautiful trap low into a strength buy. I've got my first target on that strength pattern, right? First target on that strength. Remember, it's all based on volatility. That first target, right? So you can see right here where it says T1. T1 means target 1, right? There's target 2. Does that make sense? Okay, keep on trailing. Keep on trailing. Right now, we're just trying to lock in as much of this as we can get here. Don't get spooked on this. Remember, don't be worried about getting stopped out of good trades. It's okay. It's okay if it stops me out right here for a small profit. It's fine. I'd like to get the big profit, right? Buyers want to get the big move, but just make sure you follow your rules, right? Because the rules are going to keep you out of trouble. Because for all I know, this could go right up and right back down here, right? I don't know if this will keep going here for me. Now, let's get that first target here. First target is always the most important because that's the volatility-based target, right? This is the target at 19.3, this T1. T1 is the volatility-based target off of that strength trade. So this is the one that should get, there you go. Got it filled, perfect. Now trail it again. Boy, beautiful trap into strength combination. Great example. This is probably one of the best strength trades we've seen here all month. Just because it was such a beautiful bounce right off that low, coming out of that trap, plenty of room to run higher, big strong green candles, right? That's what tips you off to the strength. Just remember though, guys, like I say in the classroom sessions, don't be irresponsible with these strength moves. You don't want to be, for example, I wouldn't want to take this strength move, right? Because now I'm too close to what? I'm too close to that measured move. Okay, so we know where we're trying to go here. Put that vertical line on, get that runner up there. You know, every once in a while, these markets, they just keep on going. So I want to take the majority of our profit off at the measured move, of course, right? The measured move, of course, is going to be the most important target. But hey, if you have an extra, right, if you have an extra contract or two, you know, let that puppy run. Okay, so 2-candle trailer. We're doing everything we can right now on the trailing stop. We're waiting patiently. Notice my secondary target is a few ticks ahead of that measured move. Oh, get a little bit wiggly here, a little bit here. Come on, there we go. Running here now. Keep on trailing. Keep on trailing. Keep on trailing. And at this point now, the writing is on the wall here for the gold. Keep on tightening up here. Keep that stop tight. Now it's not the time to let this thing pull back against you. Stop tight here. Stop tight here. Keep that stop tight. I'm going 1-candle trailer now. 1 candle. Lock in that profit. Really make this market. Make it keep going higher. If it wants to keep going higher, let it keep going higher. But if it pulls back, not going to pull back too far without getting me out of this position. Man, what a great example here. No matter what happens right now, we've got a target ready here if it wants to keep going higher. But if it wants to pull back, take me out of the trade. Beautiful example of a strength move. Momentum is bullish. Lots of open space to run. Again, 4 to 6 consecutive green candles. And, of course, you're entering right on the red candle there. Beautiful example. Great job on that. Wow, 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 wow. Now that was a great example of a strength setup, wasn't it? And another example of how powerful this 3-step strategy really is, right? Define the day type, add the analysis, and then find the setup. Boy, I hope you can see our trade room is such an advantage for our clients, isn't it? You know, my job as the leader of the trade room is to make sure everyone knows exactly where to be looking for the best trade setups each day. It's such a great shortcut for anyone who wants to take their trading to the next level. Well, that's it for me today, guys. I'll be back tomorrow, though, with another valuable lesson in this free trading course. So keep an eye out for those 3 emails coming tomorrow morning. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.